It's the Market Sniper, and we're coming at you. It's Thursday night. Tomorrow, yep, guess what's happening? There is our live trading day, and look for the link below to participate and join us for an hour and a half of the traditional markets, and of course an hour and a half of the crypto takes, where we have tokens that we are actually long against Bitcoin, and not just the Ethereum one that we've told you about. Oh yes, there's lots of interesting things to be revealed, but we're talking energy and natural gas on the Market Sniper channel. So we totally thank you for the fact that you've just gone and hit the puppy licks button right there, where you get the thumbs up for licking the puppy's face, and you smash the share button for a little old smear to your Facebook, Reddits, Twitters, wherever you hang out, and say, watch this man. Do you know all our growth is generally organic? We do not have adverts on this channel, and as a result we are punished by the algo. They don't make money off us. We want you to make money, and let's talk about natural gas. So a while ago, before, in fact, in premium we were discussing before the triggering event, but I did have a discussion with Josh. My audio was off there, and it's set to the wrong card when I wasn't watching a little bit, but go and have a look. We were talking to Josh about natural gas, because he's bullish overall commodities, but particularly the smaller side. We are overtly a deflationist for the short term. In other words, we think the inflation has now, people were calling tops too soon, but I think the events that are going to come shortly will in fact be demand destroying, and you will have disinflation to the point where you may get outright deflation. So watch out for that. I think that's going to hurt, unfortunately, commodities, and it may make Josh's picks a little cheaper after the event. We see March as the key reason, and we've discussed this in our premium community in greater detail. But we were highlighting and warning over here that we had this head and shoulders that was suggesting actually a possible price for around about sub the $3 level. So let's have a look at it, how it's gone since. This is a 3-day chart. So I break up charts to suit the pattern view that I'm currently looking at. This also includes some of the trend. We can pivot to the daily in a minute. Also, on the bigger time frames, we tend to use log scales, logarithmic. Yes, so we can drop down to the daily to have a look just at the pattern in review. A couple of things that people learning their skill that I will happily give to you for free is that you actually get a smaller head and shoulders often in the head of a larger head and shoulders. We refer to those as monarchs. Monarch head and shoulder, yep, it's the king. And then the blue one is subordinate. It is the bigger, broader one that comes in with a lower neckline, and the necklines get lower. That first monarch performed. That was already a key point that was suggesting to you that in fact, yes, you are potentially having a reversal, and it starts on the smaller time frames first until it rolls into the bigger ones. That didn't stop you having a fairly strong shoulder. Where did it die? Shooting star, shooting star. Yes, don't you know you are a shooting star? Okay, I won't quit the day job, I know, but that was bad company for those of you that were listening to 80s, 70s rock and roll with me. Anyway, shooting star at the neckline. It was neckline round about the 7.875 level. Target was made, and the overrun burn pushed it to a very, very convenient level. That is around about the 5.4, where it had bottomed before. Note a smaller right shoulder, very good typically to have. Smaller right shoulders when you're doing a head and shoulder, but you did get a double bounce. That's the complexity of complex head and shoulders. You can learn about that by going to the Market Sniper, but booking a call. You knew that already because you're regular fans and watchers. But have you shared this to your friend? They want to grow. They want to build wealth. Give us a share. Give us an organic growth. We appreciate it. And we're heading for... oh, the 60,000s will be our next big number. Help us get there. We appreciate that. So anyway... that complexity is something we will teach you a lot about in terms of dealing with heads and shoulders, and the embedded nature of the monarch and the ever-growing subordinate ones below. So we're looking at good progress now, and one of the reasons good progress, well, we like the smaller shoulder, we like the gaps to the downside. So this is showing absence of bid. So you know you had the super moon of gas, which went along with the narratives of Germany, European shortages, etc., etc., etc. And as a result, a lot of that gets priced in, and it can get overpriced in to a degree, and you're getting clear signs that there was gaps. You also had a squeezy Japanese who would put in a grind line in there. You can learn about grind line theory as well. But as I say, instead of learning about anything, why not just come for a trading day tomorrow? That's right. And you will get the non-farm payrolls number data coming as well out. You know, the fakery and the dirty deeds and deception that goes on that involves the Bureau of Labor Statistics. You get lies, damn lies, and statistics, my friend, and we'll participate in the great lie and we'll interpret it in the pursuit of truth. Yes, what a vain racist notion. I know. Anyway, nonetheless, all these gaps pointing to absence of bid and then a big gap over here. Sometimes after you've just had a bit of gap, you get a little bit of overcooked on the downside. So although we expect lower, which would be a run into the sub threes. Don't forget, this was trading up top at 9.5s, probably going on 9.7. So it's quite some call, and you could have been in from around here. I would have argued would have been the earliest I would have got in on the break of the eventual grind line. We're looking at that on a bigger time frame. That's why it's cutting off all those wicks. But yeah, run about there. You'd be in at about 5.8, looking for a number sub 3 in the 2.8, 2.9s. And there's potential for overperformance. This is a key thing that you get. You get a lottery ticket thrown in with Head and Shoulders, because it can be a cyclical top. If we get a truly demand-destroying event, as I anticipate is possible, in actual fact, everybody will do a whole bunch less of everything, and commodities will sit stagnant, hanging around, waiting for them to be bought. And as a result, markets will bid lower and sell off. And you can get overperformance on Head and Shoulders. They're often cyclical tops, as you have seen with the initial Monarch Head and Shoulders that I drew for you in the pink. Yes, transgender pink. What a beautiful color. What a beautiful notion. What a beautiful cultural attack it is on all of us. There we go. Here we go. Especially our ladies, by the way. Oh, it's a crime. It's a crime against humanity. It's time for men to stand up. Oh, we don't want to get on to reset topics. Let's shut up. So there we go. Break, spiller, absolute thriller. A little bit of overperformance before you get the rally to the neckline. We covered that already. Real spit down. A bit too far, a bit too fast. What I was saying to you around gaps. Oh, by the way, little clue for the masses. Why not? Because we kind that way. Often, in actual fact, and this comes out of other readings, this is not HVF method theory, this is somebody else, and I always pay tribute to the other people that have originated new theory and thinking in technical analysis, because it is deeply in need of it. Oh yes, too many snake oil salesmen and dodgy indicator types for my taste. So this could actually be a far bigger fall. I'll tell you about this little trick. A little trick that came out of Constance Brown Fibonacci book. So when you get a point of capitulation, if you measure from the top, the final high just before the capitulation happened, and you went into a gap sell-off there, by the way, let's just put it in, slip him in, fill that gap, you dirty dog. There she goes, slot him in. It also coincided, of course, that gap with the legacy key level of significance, which is very much our theory. That was the target of the Monarch Head and Shoulders that we've already told you about. But let's just leave that significance for now and point out this. We'll take away the risk reward, which is going to get a lot juicier in a second when I'm done. So let's just make him smaller. Why so fat? I'm a fattest as well as a racist. Wow. Just not on form today, am I? All round bad guy. So that gap, spiller, absolute thriller, you run it from the high, you put the 50% of the Fibonacci on the clearest, biggest, largest, highest momentum period where you get a gap in the market. So it's quite common that the highest point of acceleration and absence of bid is actually halfway. This happens unerringly often. To be interesting, to be deeply interesting, in fact, and that would actually have you right down to 1.584, given that you traded 9.5. That is some decimation, some demand destruction. In other words, what have I done? Some people are looking confused. The 50% of the fib, which I've intentionally made black because black lines matter, and we've got a gap there. As a result, you're having another form of that distance reproduced to the downside. Because this is in log scale, it looks a lot more, because log scale is right, because we're on the daily time frame, and everything from there and upwards we treat in log. So that would give you a value that, if correct on the Fibonacci, would give you a lottery ticket bonus on your head and shoulders. So you could close a certain percentage of your trade on the natural gas, or you could have. It's late to chase now, sorry, but you could potentially, and you could stay out of Josh's picks on energies until such time as maybe this is run, and then you could start looking at bottom picking and getting in a little earlier. Now that risk reward is a whole bunch more interesting. Let's pull him up, pull him up, pull him up. Do your pull-ups in the morning, guys. Yep, pull him up, pull him up. Yep, there we go, there we go. I've got a pull-up bar, and I've got it attached to a tree outside. It's very organic. It's a very organic world for around where I live. It's good to get the sun on your skin while you are working out, building energy, keeping yourself in great mental health. After some cold water submersion, you will say, but you need to warm up. Actually, I'm finding working out after real contraction on cold water submersion, providing you never do extremely heavy weights and you do real quality repetitions, is very, very good for you. There you go. Little health tip on the channel as well. I haven't done coffee in ages. So you can't accuse me of being on crack, smack, or caffeine. I am not a drug utilizer of any form, not even the caffeine anymore. So absolutely, we are down here at the 1.584 as a possible outsider. And that's the lottery ticket I was referring to. That is quite extensive. That comes out of a head and shoulders with a monarch head and shoulders. You've learned a new phrase. There you go. You can learn how to spot them. You can learn all the theory behind them when you book a call and become a member in the Trading Metamorphosis community of wise men that have been doing amazing setups. They go out and they find things for me. It's a win-win situation, and they're learning and they're learning and they're becoming awesome. And you know what? You know a system's good when the students do the same draws as the teacher. Now, I defy you to go to any of these other methods and see their rules and then notice that they flex a rule, as we did with Dave the Wave on crypto. He just closed his trade because MACD, but it didn't go to the other side. Ooh, well, I know, but I thought there was loss of momentum. You see, that's it. What if your practitioner, who's no longer under your tutelage, was waiting for it to touch the other side? Well, he'd still be bag holding. You see, that's the difference. You've got to have a method that everybody comes out with the same answer when they're applying the same rules and they've been trained to a suitably high enough level to understand. Anyway, I keep on sidebarring. What's with it? What's with it? What's with it today? Anyway, so that would turn into a risk reward ratio that can't be 3.88. Don't lie to me, boy. Don't lie to me like that. Let's try one more time. Is it only 3.0? Really? Let's go back to reg scale and have a look. My eyes are deceiving me. Yeah, kind of is 3.88. The log scale, the distortion. It's like, okay, I quit all the caffeine and the booze, the narcotics, but I'm clearly on the vodka. No, it is 3.88. Don't argue with the computer. Shit, man. Okay, so 3.88 it is. It's kind of decent without being super spectacular. But there you go. You've learned a couple of things. Go read Constance Brown's book. Go buy it. Hey, I get nothing for that. Go look at it. Go learn something about Fibonacci. It's one of the most interesting points that I discovered personally out of that. You've also got a bit of information on head and shoulders, and you see why I have been posting about demand destruction and commodities down. And I'm the guy who loves the idea of owning precious metals, who loves the idea of assets and tangibles. Guess what? When they kill money, when they up rates and kill money and force collapse, money dies. Deflation is the death of money really, really fast. So cash becomes king. Cash becomes king over even physical things, even though it's fake cash in a fake system that will eventually be put to bed and die. So in the short term, all these things are going to lead to disinflation towards deflation. And as a result, holding cash is good. Cash in banks, not so good, according to me. There's record numbers of cash in banks. I've already done that with you, haven't I? So I'll not do that one again. But there's quite a bit of cash kicking around in banks. Cash in hand, cash in hand. Yes, it's very barbaric. It's very common. It's very gangster to have a tog bag of cash, but maybe you should think about it, because who knows how it goes down. The bonds may get a bid, the bonds may get a bid. I won't ever own debt though. That's my personal rule. I just don't ever want to be that guy that's stuck in FTX when it goes down. You know what I mean? Okay. Oh dear, oh dear. So that's what we're going to do. So here you go. A little bit of update. So key message. Natural gas is one of the weaker energies in my overall opinion, but we are also seeing reductions in the oil price as these things are taking place. So pop on down to the WTI. Yep. So by the way, what is this disinflation also going to do? It's going to potentially bring the dollar back. It's potentially going to bring the dollar back. So if we have a look at the commodities, we're seeing that Brent is no longer being able to hold the 80s, and that WTI is actually on the lower side of the 70s. So nasty little sell-off there, and also on the UK. Remember, actually, I'd love to have the epic long only calls, but a lot of our big calls on the oil have all been to the short side. 2014, that was that break over there. Let's show you it. Show the chart. We need a D-log on that because of the zero run. That break over there and this break over there, the big spillers, and then we said this will reverse and that you will have overreaction to the high side. Now we have begun quite a bit of a pullback action. This was the second highest to the all-time high that you barely held for a while. It was absolute blow-off market just before the subprime crisis, and it gobsmacked many that the events of 2016, which ended in China's major indebtedness and a little bit of a Shanghai Accord that occurred, although they won't tell you as much, would crash the oil price so far below the previous low of what was the biggest property bubble bursting almost globally, but certainly in America, certainly a lot in the UK and many other places such as Spain, Cyprus and various other places in the world. So what's going to happen? Again, I reiterate, real deflation in property prices. They are going to drop. They're going to feel the pain. Real deflation and reduction, loss, crash in equities generally, particularly growth equities that don't like interest rates, are not dividend or earnings producing as yet. So those are going to fall particularly hard. Cryptos, I'm afraid, will fall, but I don't think this is about yet to happen because cryptos have had a lot of bad news baked in. They've almost got selling fatigue, but after some time they will be dragged down. This will be bigger than their hangover and their desire to rally in terms of events. So those asset categories, what will gain? Dollar likely to gain somewhat, and potentially a great deal, and debt markets likely to gain, although I will continue to point out confidence has been lost in the debt markets following the events of Britain and Japan, and even behind the scenes in America, I can assure you, in terms of debt, and people have started to look beyond this debt bull market. There are more people now in the room, although still a minority, that are starting to accept that the debt market has turned from its 40-year bull. In short, stagflation, stubbornly high interest rates are going to be far more part of this world. And we had the financialization of everything for the 40-year that Greenspan ran after the Volcker years all the way up, and was continued by the likes of Shlomo, leukemia face, Bernanke, who looked absolutely like death warmed up at the end of his term, followed by Granny Yoda, the Yellen, and now with Jay Powell. So all these people have, once Greenspan set them on the course, very little choices but to continue with the ever-loosening policies. That spell of expansionism and financial engineering I assess to be largely over, and we have a massive unwind of financial leverage, and it's going to be difficult on banks too. Will we still have banks as intermediation? Who knows? Anyway, so oil could continue to, it's already fallen a lot clearly, but it could continue to underperform and list, but as we've highlighted, natural gas is the weaker still for us. Good. That's commodities. We will talk more in the live trading day on gold, silver, and do the charting for all those. You are welcome to join us. Check the link below to join us for the live trading day for $197. Yes, you can get the price straight from me. You can come for the full 3 hours. That is about $70 an hour. It's pretty cheap. Is it? No. Yeah, 65 thereabouts. And if you take buy while stocks last, let me just insist, while stocks last, buy 3 for the price of 2. Yeah, That's right. We can facilitate a reasonable number in our go-to meeting. There are plenty stocks. I will not treat you like a fool with such dastardly deception. No, sir. No, sir. This is the channel of truth. We're warning you that energy is going to still have a tough old time, gas particularly in our view, and that demand destruction is on its way. And as a result, you should be thinking about preparing. Come and join us for the trades that will make you money in reset times when money is actually disappearing, contracting, and people are losing wealth. You can be stand out relatively wealthy. Keep stum, don't brag too much, be humble as all hell, but we'll take you there. Okay, to the promised land. Until next time, bye for now.